Big news has just shaken the ASX and it could mean major profits for those who know where to look. 3 household named companies just made headlines. The market's reacting fast, but the real question is, what's the smart play from here? That's what we do best here at Wealth Within. We are one of the few stock market educators who hold both an AFSL licence and a government accredited training program. Plus, with a team of professionals including decades of trading and investing experience, featured and trusted by Bloomberg, CNBC, Sky News, to name a few, we know how to separate hype from hard opportunity. So buckle up, because by the end of this show, you know exactly how to win from today's breaking ASX news. I'm Dale Gillham, joined by senior analyst Philip Tordtevsky. How are you, mate?
Very good, yeah, very exciting. Big news, big stocks. So looking forward to what's coming.
I know, I hope I can keep up with it, because I haven't sat in this chair for a long time doing this show. But anyway, first up, BlueScope Steel. They've just delivered a surprise earnings update that has market second-guessing its next move. We'll break down what's behind the numbers and whether this is a short-term bounce or a long-term opportunity. And while BlueScope is grabbing headlines, the real shock came from one of Australia's most recognised consumer brands. News that could send its share price swinging. We'll get into that in a moment. Now, Phil, we're going to talk about BSL.
Yep, that's right, Dale. So BlueScope has just announced some major news today. They have delivered their FY 2025 earnings. Now, they're entering 2026 with confidence, which is nice. You can see what we've highlighted there. Total reported FY 26 underlying EBIT, earnings before income tax, 732 million. As you scroll through that, what was quite interesting to me was whilst the softer performance than last year was noted, it is in the face of the cyclical softer commodities and conditions and global uncertainty during the year. But the biggest takeaway is that it is underway to reduce its cost and grow through cycle earnings, meaning BlueScope is leveraged to the upside. So again, we're seeing this all throughout with these miners. Not so bad, could be worse. And it's really lining up in terms of the share price at an interesting point. This could be just the springboard to send it really soaring, taking away a lot of that uncertainty, saying things should have been a lot worse. Maybe now they're not. Share price is holding up. So it's just about identifying that right moment, which we're going to get into in a second.
Yeah, I wasn't concerned about that announcement. I think that's an opportunity in the waiting, because, I mean, let's face it, the market's been going up and the economy feels like it's crap.
Yeah.
So to me, that's that. When the economy starts feeling good, the market's already good. So I think the upside potential is huge.
Yeah, especially on a stock like this. All right, so let's get to that chart of BlueScope now. And I mean, Dale, to me, where I guess, line in the sand, there's a real drawing battleground here that we've got marked, and they're the most interesting levels. It's $20 or about 19 down to 16. It's been such an important level for BlueScope. You can see that back in 2009 and in 2018, they were the two most important turning points for the stock, providing resistance. Now that's turned into support. We're rising nicely, albeit the stock is kind of compressing, and that to me speaks a little bit to the uncertainty going on. But as the CEO had mentioned, things are looking to get better in 26, and really, I mean, watch this level like a hawk, $26.
I think once it gets through that, I mean, you've got to be looking at $30, $40 from that.
Yep.
I think there's easily 30% growth in this stock if it gets through that level. And to me, that's the exciting thing. Because when we're looking at stocks like this, you see stocks that take off like a Combank, right? And their biggest move is in the middle of the run, not necessarily the end of the run. Where stocks like this, it's a bit opposite. The big move happens near the end. So it's had a big move already. It's consolidated the last couple of years. I think when it gets through that level, that's exciting.
Yeah, and it just speaks so much to, I mean, we see it with our traders, our students that come all the time. It's all about getting that timing right. I mean, because you avoid a lot of those years of lost opportunity. You know, as you often say, the opportunity cost of your money, sitting in stuff going sideways or down versus finding those pockets in the market that are accelerating. Right now, the materials sector is getting hot. And if you look at this one here, we're not late to the party. That's the important part. Knowing the technicals, as we know, those important levels, and we've seen it so many, I mean, I can't tell you how many emails I've been getting around this $26, $27 level.
From graduates and students.
Yes, waiting, saying, hey, guess what, if it gets through there, and it's very obvious, but powerful to know. So,
but how often have you seen that is when we talk about a stock on one of our shows, our graduates have all been talking about it for ages, or they're going, yeah, that's already on my watch list, I'm ready to buy it, and they're sending those in because they're using their knowledge of what we've taught them to look at and bring up the same stocks as we have and trade really, really well.
Yeah, and I mean, I'm going off topic here, but even last week or a few days ago, Warren Buffett picked up a new stock in his positions. You go and look at the chart, and I did it on one of our TikToks, go and check it out, Wealth Within, but you go and have a look at his chart. At the second that the stock was bought, which was in Q2 around April, was literally as the stocks touched the trend line. Now, call me crazy, but a stock in free fall, why pick that buy price? Why not 70% fall? Why not 80%? Why that exact level? And it shows that, hey, maybe the world is looking at this stuff in terms of their analysis.
There are much more than what there was in the 80s, that's for sure. But much more looking at it. But this looks awesome to me. Well, now let's take a look at A2 Milk. This update has thrown fresh excitement into the possibility of a major share price gains. But is the momentum sustainable or a trap waiting to snap? Well, we'll break it down for you in a second, but if you think that's big, just wait, because one of the big four banks has just admitted to a costly blunder that could ripple right through its sector. Now, we're going to cover that next, but let's bring up A2 Milk first. Now, this is a stock I've been trading about since for nearly 2 years.
Yeah.
I was with Money Magazine on Friday chatting with them, and they said, back 2 years ago in the December, in my stocks for your stocking, I just said, here's my dark horse. And they went, wow, it flew after I talked about it. And they couldn't believe you could pick stuff like that. And it's come back recently, so now it's looking even better again.
Yes, and some big news that we just shared on the screen, that it's coming out. I mean, they came out with full year profit jumps. But even bigger, the company is looking to buy New Zealand formula plant for China growth. Now, part of what the earnings results were linked to a uptick in the China story, in the China growth. And as the CEO said, it's been an exceptional year for our infant milk formula business. So they are looking to grow out into, I mean, China, you're talking...
Oh, massive. I mean, we saw what happened a few years ago when A2 Milk went flying because they couldn't get enough of that stuff in China.
That's right.
Because they don't trust their own milk. And the baby formula was, very, very sought after. But I love this stock at the moment. I think it's looking really good. Are we going to look at the chart now?
Absolutely. And this is the part that gets even more exciting, Dale, because again, looking at these levels where the stock has been really challenged, and that had been that $7.13 level in the past. It's very obvious on this monthly chart. Found resistance. Now it's actually finding support on the upside. Really big buying support on the month of February 2025. The pullback's been what you would expect in a bullish scenario, really. But for me, the part that I wanted to highlight more than anything, I've circled this area in the rectangle box. And the reason I've circled it again, I want to go back to the things that we do teach here at Wealth Within. These textbook patterns that have unfolded for a very, very long time on the market.
Yeah, that's why I like this stock.
Well, when you see this kind of stuff, I mean, it really gives you an indication of what's likely to come next at a significant level. It couldn't get any more textbook than this. So right now, as long as A2 Milk for me holds above this 710, 713 level and starts to pop up, if history repeats, this formation here points to A2 Milk being a $14 stock.
I'm waiting for it at the moment myself.
Right, and so that spells a lot of opportunity, some really nice fundamentals coming now into the picture on the back of that, or opportunity, future growth from that perspective. So one to watch, a break above $8, $9 really signals that next leg up, and a bit exciting.
Well, to me, this is a better stock than what a lot of people buy. A lot of people try to buy really cheap stocks trying to knock them out of the park, where this one's far more guaranteed to make you better returns. A lot easier to trade, a lot easier to pick, a lot easier to get into, a lot easier to get out of, and you're not guessing. And that's the biggest thing. I've been chatting with a lot of traders the last couple of weeks, and they said before they did our course, it was all just guesswork. It was buy and hope and buy and pray, as I say a lot of people do. But anyway, if you want to stop buying and hoping or buying and praying, as so many traders actually do, how about you grab a copy of my first book, How to Beat the Managed Funds by 20%. It's free. I've paid for the printing. You've just got to pay for the postage. So head over to our website, wealthwithin.com.au. It's in the store there, or you can probably click the link below in the description for this video. But get your copy of it now. As I said, it's free. You just got to pay the shipping. Now, finally, National Australia Bank, a huge payroll underpayment, rising costs, and a margin story the market didn't see coming. The question now, is this the start of trouble or an overlooked chance to profit? I'm going to go to you, Phil.
Yeah, so the big news coming out of NAB is there is a significant $130 million increase in operating expenses, all tied to staff underpayments, which were discovered during an internal payroll review. Now, the $130 million provision will lift NAB's full-year operating costs by approximately 4.5%. Though that figure may shift as the review unfolds. Now, despite all the setbacks, I mean, they recorded their third quarter cash earnings rose by 2%. Now, still a bank making profit, nothing new, right, Dale? But I mean, for me, it's a bit costly in terms of what they've done here. They've underpaid.
Well, how often do you see this? That the financial services industry stuffs up somewhere. It's either with their customers or their staff, or they're always getting fined by ASIC and everything else. You think they'd get it right, wouldn't you?
Yeah, I mean, CBA...
They still make billions of dollars in profit.
They do, and their share price, you can't fault CBAs right now, obviously having a bit of a pullback, but, you know, that was another one in the media, getting some backlash for not paying customer
Yes, that was one thing I went with my meeting on Money Magazine on Friday. They're going, can you do a thing on Commonwealth Bank? You know, they made record profits again. And I go, yeah, that just means the share price is going to come down. Because that's what happens often with CommBank, record profits, and it wouldn't surprise me if over the next 3 months it drops 25, 30%. It would not surprise me at all, because that's what normally happens, because people think, oh, it's up, I'm going to buy it now. And the big end of town are selling into that because they've already made the record profit. So as we tell people, you can't buy yesterday's return. So are we now going to go and have a look at the NAB chart?
Yes, we are. And what's quite interesting with the NAB chart, once we bring it up, I like we were speaking about Commonwealth Bank a second ago, because when you look at the chart of CBA and I bring up the chart of NAB, now this is the monthly chart, Dale, the whole history of NAB. If we zoom that out and go back to the beginnings, you can see that what we can...
NAB's the worst one to hold forever.
Well, and it's interesting because you look at Commonwealth Bank and the buy and hold approach out there would say, hey, big bank, in Australia especially, the big four, highly regulated, strong companies, you would think a lot of the charts would look or resemble the way it resembled up to 2006. But you look at Commonwealth, it's gone on with it. You look at NAB, and I zoom that forward, the volatility and the nature of the movement has changed completely. It's basically become a range-bound stock between 20 and 39. For a bank, that is very interesting. And again, you know, identifying that this is the case, what I think NAB does provide since the GFC 2007 are good trading opportunities.
Yes.
And knowing how to take or extract those opportunities from the market, that's the key with this stock right now. And yes, okay, recorded an extra 2% in profit, but for me, it's always been about extracting the right opportunity with NAB, because if you can't do that, you can see you can ride some serious downturns and get wiped out with this particular stock. So right now, what's quite interesting, again, the $34 level, keep a very close eye on it. It was a hurdle for a very long time, but given we're now 2-3 months up, we've had a really healthy pullback, not even pulled back half of the move up. That is quite bullish. This month we're starting to rise. If we can break above the previous high in June,
40.24.
Yeah, we're going to go for a nice little run. But in terms of expectation, again, I'm treating it as a trading stock. A run to 42 would be great, but then after that, anything can happen.
So what you're saying, if people are looking to buy CommBank, their outlook probably should be 18 months plus. If they're looking to buy NAB, 18 months or less. That's roughly what you're saying.
Yes, and
I'm just trying to speak English to some people.
Yeah, sorry. Sometimes I can speak German. But it very much depends on the price of things and where the stock is today. That's the most overriding thing. And it always goes back to go to the chart. Look at the opportunity today. Look at the risk-reward scenario. If you can't answer those questions before you get in, it doesn't matter if in history Commonwealth Bank has been a great stock. You buy at the wrong time, you experience a 20, 30, 40% fall.
I mean, if CommBank falls 30% in the next few months, what would you rather be doing? Sitting in that or getting into another stock like NAB, who could be going up 30 or 40% in the next 3 to 4 months?
Or moving into a new sector
BSL
like
or
materials,
A2M, something like that. Because and one of the things I dislike, and Buffett is the same, I don't like this sector investing stuff. And I almost said the SIH word. I don't like it because it keeps people broke or keeps people with average returns. So you don't have to have a bank in your portfolio. So that's one of the criteria. Again, you'll learn about that in my book if you do want to get your free copy of my book, How to Beat the Managed Funds by 20%. Again, it's free. You just got to click the link below. Now, if you want more hot stock tips, check out our video, Lithium's Big Breakout, 3 ASX stocks to buy.